David Weild, the founder and chairman of Weild & Co., former vice chairman at Nasdaq, in fact, a legendary Wall Street executive, if I may say, who has often been dubbed the father of the Jobs Act, currently in its 3.0 version since being passed in 2011. You're also an advisor on the board of several blockchain companies, plus heading to Israel next week for the Next Block Conference, From Chaos to Clarity 2019 Trends, to be held in Tel Aviv. We will meet you here as well. Before anything else, though, I want to touch with you on what's happening this week, because this has been quite a bad week for markets. And, we're looking at stock markets dropping, NASDAQ 100 down, online chatter of a possible recession on the way. We have seen the same trend, one can say, in the crypto market over the course of the last month. What is happening?
Well, we've had a very long bull run, particularly in the United States. The United States market has outperformed most other markets. And actually, a lot of the foreign markets, if you talk to portfolio managers, look comparatively inexpensive. And so I think a lot of the conventional wisdom amongst at least New York or U.S. portfolio managers is maybe it's time to start allocating assets to developing countries, which obviously is better for them. So I don't think all is lost. The United States had a heck of a run here. At some point, there has to be a correction. There's been, as you can say, a lot of volatility coming out of the U.S.-China trade deliberations and the Trump announcements, and so I think as a consequence, the market is a little jittery. The problem with trade wars is pretty straightforward. You have the potential for higher costs of goods, which is inflationary, but it's also going to be recessive at the same time, because the higher cost, people are not going to pay for things. So higher prices, potentially poorer business conditions. It's sort of a 1-2 punch that I think can be very problematic for stock markets.
Well, let me ask you, I'm wondering with you out loud. First of all, when do you think it will bottom out? And we've seen, the cryptocurrency market doing the same thing a bit longer than the others. Do you think the two are related?
No, I really don't think so. I think the crypto market sell-off and consolidation was because there was, quite a lot of misrepresentation and fraud, and then concern about regulator response. And so I think what we're seeing right now in the crypto market is actually very healthy, because I think it's coming. I think there's bona fide technology there. And it's going to find its niche. I think it will be transformative in many instances, but I find it in many respects very similar to what we experienced during the dot-com bubble in the early days. I mean, there were massive bull runs, and then there were massive consolidations. I think that what we're seeing in these markets is that things tend to happen more quickly. So to the extent that I think that there's going to be if there is a correction in markets in general, I think they tend to be, at least in the stock markets, much more quick, sometimes pretty vicious, and then you kind of get back to business more quickly than you did in the past, which has its pros and cons. The crypto market sell-off really was one very different, because it was populated. There was so much misrepresentation and fraud and cowboyism, and we've got to go back and clean up a lot of that mess and come back through the portal.
How do you clean up that mess? How do you regain the faith in that market that desperately needs to be mainstream but is not there yet, and this happens?
I think that you're going to start to see private placements that are much more to private placement standards. People are not going to be selling things to the public. They're going to be treated like traditional early stage offerings, A rounds, B rounds, C rounds. So it's going to come into the kind of the more traditional vetting process, which I think is healthy. I think that anybody that's a professional investor is sort of excited about any kind of technological shift and how it can be applied. So I think there will be plenty of professional eyeballs to look at these things, and teams that sort of cut their teeth and earn their bona fides. And as a result, I think you'll ultimately see companies go public. But part of the problem is, you got to make a distinction between, you know, sort of traditional ICOs and security token offerings. And you know, if you go to the United States example, we require for a public listing on a major stock exchange, NASDAQ, the New York Stock Exchange, we require a transfer agent. And there is a case to be made that you don't need a transfer agent with the block. But the SEC, which is very risk averse, is probably not going to waive that requirement. And so you're starting to see situations where people will take the block and then create a copy with the transfer agent, so that you can have a transfer agent and the block living, you know, in parallel, just in case something occurs. So people are starting to figure out how to check all of these boxes. The SEC is going through a process of being very diligent in learning. And so I think that you're going to start to see offerings, you know, come to public markets again in the not too distant future. You know, I'd say give it another 6 months.
And fascinating. I want to touch on the institutional and mainstreaming, you know, blockchain, or let's say mainstreaming cryptocurrencies. Before that, though, you were speaking about ICOs, which were all the deal, you know, a few months ago, and now they seem completely dead. Are ICOs dead?
Well, in the form that they were, and they frankly deserve to be dead. I mean, they were, you know, these were securities offerings that people pretended or deluded themselves into thinking that they weren't securities offerings. And we actually, in our investment bank, literally 3 months before Jay Clayton came out, SEC chair, came out and said he hadn't seen an ICO that he didn't think was a securities offering, we told everybody in our investment bank that we're going to treat them all as securities offerings. And you know, we just, from a public policy standpoint, after having read a number of the white papers and noticed how light they were on disclosure, there were no risk factors. You couldn't really figure out with that token what rights it really gave you economically. And so we looked at it and just said, you know, at a minimum, even if it's not a security, there are going to be jurisdictions that are going to deem these things to be fraudulent and, you know, and misrepresentative. And so I said, we can't be involved in that as a regulated entity. And then 3 months later, SEC Chair Clayton, as he darn well should have, came out and said that these were securities offerings. And I want to say that that's, I thought that was absolutely terrific. And not because I want to throw, you know, cold water on a party, right, but because ultimately for these businesses to be financed and to grow and to prosper, there has to be a set of a bargain, if you will, with investors. There has to be respect with to investors, you know, and there can't be cowboyism in the markets, or that in and of itself is going to completely destroy investor confidence. And you can't have that if the businesses or the businesses, the industry is ultimately going to emerge and thrive. And, you know, you look at the internet, it's fascinating. You know, the early ideas were, you know, with the blinding light of hindsight, sort of Web 1.0, Internet 1.0 were pretty sophomoric, right? They were pretty crude.
True.
But what we've seen sort of emerge from the primordial ooze were some absolutely game-changing businesses that have really now stood the test of time and have transformed entire industries. You know, everything from the distribution of music through iTunes to Amazon.com, you know, eBay, Google, right? You can go on. And so I think that is exactly what we're going to see with the blockchain. But I think that the block is just a piece of the equation. You know, what we really have is that people look at tokens and they think that these things are somehow so unique. But yet, if you think about it, what was that long string of characters that you used to activate software that you would buy on your computer and download onto your computer? That's a token, right? And that's essentially what that is. What's different here is that you're taking tokens that then can be transferred in many instances. You're linking them to software processes, and then you have something that keeps track of the transactions, which is the block. And so you now have a really an integrated system that can do a whole range of things. And so But we've kind of made it into some kind of magic notion of the blockchain. The block in and of itself is just one element of, I think, what is going to ultimately emerge as really functioning systems, and that may transform the way we do finance. But where it's going to be incredibly important to folks, and will succeed, is where we just use it and it goes, and we don't think about what those processes are. Just like today, we take the internet for granted, right?
And you think that blockchain is heading that way. Fascinating. Let me ask you about this, because you touched on, the institutionalization of, of cryptocurrencies, let's say regulation and all that said. In the midst of the drama that we just discussed, we're seeing Wall Street, as you said, finally warming up to cryptocurrencies. Do you think that mainstreaming cryptocurrencies is what we're going to see in 2019?
Well, I think it's going to be a fairly gradual process. There's no question that there are many, many different types of cryptocurrencies, and there are concerns about the ability to warehouse and to have custody. Institutions won't come into these markets. There's a risk that they can lose something. It can just go poof, get lost on a computer, and so I think that there is a gradual sort of educational process that's going on in the marketplace. People are going to get progressively more comfortable. There will be solutions for problems. I think that the kind of almost libertarian anarchist view of highly decentralized systems that are immutable and can't be changed, I think is an interesting and very sexy idea to some who are libertarians, but I think that it's probably less commercial
to the greater public.
Yeah, that's right. And so, there are things that just don't need to be radically decentralized. Particularly in financial services, where it actually may be more of a hindrance than a help. You also need, because regulation changes, and you need to change.
It's a fascinating question. I'm dragging this a bit long, because regulation at the end of the day kind of negates the idea behind blockchain technology, doesn't it?
Well, that's right. It's what's interesting, for instance, with Bitcoin is it's set into motion, and there's no throat to choke, so to speak, right? It just sort of exists on its own. It's its own organism, and so that appeals to some folks. But and there is sort of nobody to go after. Okay, but then that fits a niche but for people that really are trying to do business and securities and bring tokens as securities to the marketplace. These are companies, and those companies are subject to regulation. They can't escape regulation. And so as a consequence, they're going to have to check all the boxes and get everything done properly to be able to take advantage. And investors, there's going to be, look, I'm not a Luddite. Kids like to do things differently than people my age like to do them. They live on Snapchat. I don't even use Snapchat, right? And my kids do. So, but they like using, cyber wallets to own, to hold securities and to trade. And people of a certain generation are probably much more comfortable with their securities account, knowing that they can go to an institution. But from a company's perspective, raising capital, right? There are going to be people that want to hold their interests as tokens. There may be people that want to hold their interests as securities. And if you want to maximize your access to capital, you probably need to cater to both. And I think that that's one of the things that a lot of this kind of, philosophy of token, or, security, stock. I'm not sure that the right answer isn't you want to do both.
You want to do both, and that's, and I think you're right. I think the future generation will expect that. Two last quick questions. As the father of the Jobs Act, with an established career in the financial mainstream market, you seem to have fallen in love with the blockchain. I can hear, I've read about you, one can hear it with your passion about it. Weild and Co. advises to blockchain companies, and you're on the board of several of them. How do you pick the right ones? What triggers you? When you start assisting one, advising one, what makes you say this one can make it, this one cannot?
Well, I think if a firm is adequately capitalized, that helps for starters, right? and the management team. Management. If it's a quality management team, I think you're going to do well. If they're not cowboys and they respect regulation, you're apt to do better than you otherwise would. And so the quality of the management, the access to capital are two critical metrics. And then I think that you're going to find that there are a lot of entrants in a marketplace. It's impossible to pick who ultimately would be the winner. I'd be deluding people if I said that I knew that Google was going to displace Yahoo, which was going to displace Netscape, for example. Is if you look at the browser, you sort of some of the that went on, and but what happens is those businesses ultimately do well. They get acquired. And so I think it's probably a smart thing for most people to do their diligence and to have some exposure to the industry, broadly defined. But I would pick high quality management teams, well capitalized situations, and make sure that they're going through the front door of regulation. And you do those three things, you're going to be much better off than if you don't.
Trust. Finally, you're heading to Israel next week. We're going to meet in person. The next Block conference, From Chaos to Clarity, it's being held in Tel Aviv next week. You're one of the keynote speakers. What are going to be the highlights of your keynote speech? I'm not going to ask you to divulge everything, but what will you be discussing?
Well, I think in the United States, look, the United States, I don't want to get too, U.S. centric, but there's $30 trillion worth of equity value in the United States. It's the largest capital market in the world, and it is the one that has the most developed set of laws. And so, as a consequence, it carries a very it's very influential, largely because innovators, entrepreneurs, ultimately Israelis, ultimately want to come to the U.S. market and need to.
Everybody does in many ways.
What?
Many people want to, in many ways.
Well, that's right. That's right. I mean, when I was vice chairman of NASDAQ, the second largest number of foreign listed companies after Canada, we were from Israel. So I've been back and forth to your lovely country probably, at least a dozen times in the past. And I'm looking forward to actually going to the Tel Aviv Stock Exchange, because the last time I was at the Tel Aviv Stock Exchange was with Udi Recanati, if you know the Recanati family.
Right.
A lot of fun, and everybody, all he was doing was showing me around. It was pretty funny, and the press was writing about, speculating that something big was going to happen on the Tel Aviv Stock Exchange. Was such a.
And they were just on a tour with a friend. Okay.
That's right. I was just exactly right. So I think it's going to be. We're going to talk a little bit about some of the change in the legislation and what's going on in the United States, because markets are there's been a steady stream of legislation. There's a Jobs Act 3.0 right now.
Right, came out in August. Yep.
And passed, I think, 406-4 in the House of Representatives. There's some discussion that it may be picked up and tacked up in the Senate. If that does, I think it's kind of important to hit some of the highlights of what that will bring into the U.S. market, because look, if you change market structure in the U.S. and it's more helpful to entrepreneurs in general, then it's going to be more helpful to blockchain crypto entrepreneurs. And I think that it's important for people to generally kind of understand what the kind of the thinking of the legislative bodies is in that regard. And I think, look, Jay Clayton, who is the SEC chair, he's a big believer in technology. He actually said in his Nashville speech that the SEC has a long tradition of embracing technology that improves costs, to investors and so on and so forth. And so I think that I think what I really like about what I'm seeing is people are really constructive, want to drive entrepreneurship, but want to do it in a way which ultimately is respectful of investors. And I think that puts us in a terrific place. And I think it puts people from the rest of the world in a terrific place that want to come to the U.S. to access U.S. equity markets.
It's all about trust, and you right now made me a believer. So much more to ask. I will do so, though, next week when we see you in person in Tel Aviv. BLOCKTV will be there at the next Block conference. Mr. Weild, thank you so much for joining us today.
Shalom.
Shalom.